Minister Lawrence Wong.
Madam Deputy Speaker, I thank members Mr. Louis Chua, Mr. Louis Ng, Mr. Ip Hon Weng, and Mr. Don Wee for your support for the bill and your comments and suggestions. While this bill is mainly to effect the extension of measures announced at budget this year and the various COVID support measures that we have also announced earlier this year, members have raised other suggestions and broader concerns, so I will respond to these in turn. Let me start by responding to the comments on the budget and COVID-19 support measures. I should clarify that the bill gives effect to the implementation of measures that have been announced in the budget and in the various COVID-19 support packages. These are not new measures. They really detail the implementation of measures that have been announced. So I think Mr. Yip had questioned if these exemptions were too generous, but to clarify, these are not new measures. They were announced earlier, either in the budget or in earlier statements, and we are implementing them. And you would see that in the implementation of these measures, we have been quite careful in scoping them. For example, the R&R, the renovation and refurbishment measure mentioned by Mr. Yip, allows taxpayers the option to claim tax deductions on qualifying expenditure over 1 year instead of the 3 years, which is already allowed under the Income Tax Act today. Right? But we are just allowing now 1 year instead of 3 years. And there is no change also to the overall cap of 300,000, which applies for every relevant period of 3 consecutive years of assessment. So basically, we're allowing the option to claim tax deductions on an accelerated schedule, which provides cash flow support to businesses during this period, but we have not changed the overall caps. Mr. Yip also asked about tax deduction on provisions of doubtful debts and the diminution of value of investments under Section 14I of the Income Tax Act. Now, this is only available for banks and qualifying companies, finance companies, and is subjected to caps to safeguard against excessive provisions. This existing tax deduction aims to promote the overall soundness and stability of our financial system by catering for the building up of adequate provisions to cushion against potential losses in the financial institutions' loan and investment portfolios. The change which is to be incorporated into this bill expands the scope to include specified loans and securities in line with financial reporting standards. Again, there is no change of the prevailing caps in the bill. And Mr. Yip was also concerned about a tax exemption for packaging costs. I wish to clarify that packaging costs, like any business expense incurred in the production of income, can only enjoy 100% tax deduction. There is no further tax break. There were also some questions on the double tax deduction for internationalization, or DTDI scheme, that covers, amongst others, specified expenses incurred in the design of packaging for overseas markets. These expenses are design costs, not packaging costs. Such design costs include, for example, cost of third-party consultancy fees to design packaging for overseas markets. And as part of the Budget 2021 measure, we had announced that these design costs will be added to the existing list of qualifying expenses under the DTDI scheme. Again, the overall cap remains unchanged at $150,000 per year for the list of qualifying expenses, which taxpayers can claim in their tax return without the prior approval of Enterprise under the DTDI scheme. Mr. Don Wee had asked about qualifying expenses in relation to virtual trade fair that qualify for this scheme. Expenses incurred by firms on overseas advertisement and promotional campaigns on social media, including the engagement of influencers, are covered under the DTDI scheme. In this bill, we will enhance the scope of the DTDI scheme to cover specified expenses incurred to participate in approved virtual trade fairs. And these specified expenses include third-party costs for the design and production of digital collaterals and promotion materials for the approved virtual trade fair, and logistics costs incurred to send samples overseas to potential clients met at the approved virtual trade fair, subject to conditions. So as you can see, it's, again, we are talking about expanding the scope of qualifying expenses, but we have continued to keep a cap on the overall amount at $150,000. Mr. Wee asked if the double tax deduction or DTD scheme for qualifying upfront cost attributable to retail bonds issued under MAS's bond seasoning and exempt bond issuance frameworks can be extended to green bonds. The answer is yes. Green bonds which meet the qualifying criteria for the DTD scheme can qualify under this scheme. So these are sort of to address all the comments about budget measures, COVID-19 measures which had been announced, but we're talking about the implementation. I want to assure members that in working out the implementation details as reflected in the amendments in this bill, we have been careful to make sure that the schemes are carefully and properly designed. Mr. Don Wee then also asked about further extensions of some of the schemes beyond what had been announced. For example, he asked if the option to accelerate the write-off of the cost of acquiring plant and machinery can be further extended for another year in view of the current situation. I should say that I think each time we ask for additional requests for help for businesses or individuals, we should look at schemes in totality. It's not just one particular scheme, but we have schemes in place overall to encourage businesses to invest in new and emerging technologies to sharpen their competitiveness. For example, in budget this year, we had extended the enhanced support levels of up to 80% for existing enterprise schemes like the Productivity Solutions Grant and the Enterprise Development Grant to end of March 2022. So we continue to monitor the situation closely and review all our schemes as needed. And should there be a need to extend any measure, any such extension will then be announced at Budget 2022, and then it will be effected in next year's Income Tax Amendment Bill. So it's an ongoing process. Next, let me address specific comments raised on other amendments outside of budget and COVID-19 support measures. First, Mr. Louis Chua asked about the new Section 10P. This is a scenario where trading stock is issued for capital purpose, appropriated for capital purposes. I must clarify first that this is an existing treatment. IRAS already practices this, but this is to codify the existing treatment, which is also similar to what is done in Hong Kong and the UK. Mr. Chua asked about the disposal of property, plant, and equipment. That's capital in nature, so it's not considered as business trading stock in the first instance. So there would be no appropriation of trading stock, and Section 10P does not apply under such a scenario. Mr. Louis Ng asked about the new Section 14 ZH, where in the concerns that it may inadvertently reward a landlord who evicts a failed tenant and keeps the property vacant. This section is in line, again, with the existing tax treatment that IRAS applies up to now. The legislative clarification provides tax certainty for the taxpayers, namely landlords who are taxable on their rental income. So under this section, as long as the landlord demonstrates with supporting evidence that it has made reasonable efforts to secure a tenant during the vacancy period, IRAS will allow tax deduction for qualifying expenses such as property tax, repair, insurance, and maintenance of the property incurred during the vacancy period. So what does the landlord has to demonstrate in order to show reasonable effort? For example, IRAS would request the taxpayer to provide supporting evidence and documents showing that the repair was made to the property to keep it in lettable condition, or that a property agent was appointed to find a tenant, or that the property had been advertised for rent. And if IRAS is satisfied that reasonable efforts have been made to seek a tenant during the vacancy period, then this section will apply. But if IRAS is not satisfied that reasonable efforts have been made to secure a tenant, then the tax deductions will not be allowed. Next, let me address the points raised by Mr. Ng with regard to donor advised funds or DAFs. Mr. Ng asked for data on the amount of income tax deductions linked with donations to DAFs. We do not track this data specifically, because tax-deductible donations are currently tracked based on IPC and approved grant maker status. And this is in line with requirements for the receipt of tax-deductible donations under the Charities Act and the Income Tax Act, respectively. I understand Mr. Ng's concerns over ensuring the timely disbursement of funds by DAFs to IPCs. So for DAFs which are themselves IPCs, they have flexibility to disburse the funds for their charitable programs, no different from other IPCs. But I think Mr. Ng is more concerned about DAFs which are approved grant makers. For such DAFs, they are required to disburse the tax-deductible donations to IPCs within 5 years from receiving the donations. The only exception is when an endowment fund is being set up by the approved grant maker, in which case the approved grant maker can disburse the tax-deductible donations to IPCs over a longer period, obviously because they are setting up an endowment fund. And to ensure accountability, all grant makers are required to submit annual reports to IRAS on the tax-deductible donations received and disbursed. Thus far, all grant makers have disbursed the donations received to IPCs according to the disbursement requirements within the specified number of years. So Mr. Ng can be assured that we do not have this scenario where donations are being made to grant makers, but they hold back on disbursing grants to the charities. Mr. Ng also asked about the information requested by IRAS when an individual attempts to claim tax deductions on their donations to a DAF. Again, IRAS does not separately request for information on tax-deductible donations to a DAF. If the DAF is an approved IPC or an approved grant maker, the same reporting requirements applicable to IPCs and approved grant makers would then apply respectively. On the issue of tax deductions for donations, Mr. Wee had proposed for the government to tier the tax deduction rates based on the donation quantum. I understand the intent of such a suggestion, but such a tiered system would then primarily benefit the higher income as well as larger IPCs who have the resources to engage higher income donors. Mr. Wee's suggestion to provide 300% or 400% tax deductions would also result in more tax revenue forgone. And Mr. Louis Chua likewise had suggested to make permanent this tax deduction. Again, I appreciate the intent of Mr. Louis Chua and Mr. Don Wee to promote philanthropy and charitable giving, but we have to consider the merits and trade-offs carefully, bearing in mind that we currently have one of the highest tax deduction rates for donations in the world, and we want to make sure that any scheme we have in place is fiscally sustainable. In addition, besides tax deduction, the government also adopts a multifaceted approach to encourage charitable giving within the community. So let's not just look at tax alone, let's look at what we do with regard to non-tax measures as well. And we will continue to review both the tax and non-tax measures to do more for charitable giving. Next, several members asked about data confidentiality issues regarding audits on the administration of public schemes. In my speech, I mentioned that safeguards are provided for in the bill to minimize the risk of unauthorized disclosures and the misuse of tax data. The audits provide independent checks to ensure IRAS disburses payouts correctly to their intended beneficiaries. And the data provided to auditors will be limited to what is necessary for quality assurance of that specific scheme. For example, annual revenue data will be provided to auditors to determine the eligibility of SMEs for the rental support scheme. As revenue size is not part of the scheme designed for the jobs growth incentive, such data will not be shared with auditors for the jobs growth incentive. So the controller of income tax will have the discretion to decide on the extent of information that needs to be made available, subject to the safeguards that I have explained. More importantly, as I mentioned earlier in my speech, the data made available will not be identifiable. Various methods like tokenization will be used to prevent the disclosure of individual data. Authorized persons who are granted access to protected data will be prevented from retaining or making copies of the data provided in the first place. In other words, they can only access data on IRAS-issued devices and only within IRAS's premises. So there is no issue of external auditors storing data for excessive amounts of time. Authorized persons who are granted access to protected data will be required to make and subscribe to a declaration of secrecy. It will be an offense under the ITA and the Official Secrets Act for authorized persons to disclose any protected information to other parties. Appointed audit firms will also be required to adhere to contractual terms on data confidentiality and ensure that the use of confidential information is only for authorized purposes. In the event of a breach, the appointed firm will be liable to legal actions under the terms of the appointment contract and penalties under our acts governing the data. Let me assure members that the government takes this issue very seriously, and safeguards will be put in place to protect the confidentiality of taxpayers' information and to minimize the risk of unauthorized disclosures and the misuse of tax data. Next, Mr. Yip asked about the methods of audits on the disbursement of schemes like the JSS. IRAS, as the administrator of the JSS, had instituted a robust anti-gaming framework, making use of data from multiple sources to identify and detect abuse. While we are unable to share the specifics of IRAS's anti-gaming operations for good reasons, I mean, if you tell people what we are doing, I think encourage more gaming behavior. This framework has been in place since the first JSS payout in April 2020. For cases suspected of higher fraud risk, IRAS requires the firms to authenticate their CPF contributions before the payouts are released. Cases with strong corroborative evidence to suggest abuse are reported to the Commercial Affairs Department for further investigation and prosecution. I also thank Mr. Yip for his support for the introduction of the Protection of Informers, or POI provision in the Income Tax and other tax acts. Mr. Yip asked about whistleblower protection in other statutes. In fact, the proposed POI provision in this bill is modeled after similar provisions in the Customs Act and the Cyber Security Act. And the legislative amendment to better protect informers will also apply to other tax acts besides the ITA. Mr. Wee asked how we will prevent people with malicious intent from falsifying claims against their rivals or competitors. Let me assure members that IRAS does not act on baseless or frivolous allegations. IRAS will carefully examine not only the information provided by an informer, but also other information available to IRAS and assess the validity of any allegations. IRAS will only commence an investigation when it assesses that a prima facie case exists for tax evasion and if the information provided by the informer proves to be reliable and accurate. Apart from IRAS's internal process, the POI provision includes a legislated safeguard, similar to the POI provisions in other domestic legislation, which will mitigate against the risk of informers making false claims. In particular, the safeguard provides that the court may require the production of the original complaint and full disclosure of the informer's identity only if the court is satisfied that the informer willfully made in his complaint a material statement which he knew or believed to be false or did not believe to be true, or justice cannot be fully done between the parties without the disclosure of the informer's identity. So these safeguards are in place. Let me now turn to some of the broader comments raised by members. Mr. Louis Chua mentioned wealth taxes and more reliefs and help for SMEs. I would say in terms of direction, what Mr. Louis Chua has suggested is completely aligned with MOF's thinking. We want to address wealth inequalities and we want to do more to support our SMEs. So in terms of policy intent, we are completely aligned. But to address wealth inequalities, what exactly do we do? What sort of measures do we put in place? That's something that we will have to study carefully. In fact, we already have a form of wealth tax by way of the tax levied on private residential properties today, which is tiered according to AV. So we already have that structure in place in our property tax system. I'm unable to reveal what we are thinking about now. I think that would be premature, and I don't want to preempt the budget next year. But obviously, we are continuing to consider all options to address, as I said, number one, wealth inequalities, income and wealth inequalities, and number two, what more we can do to support SMEs. Where SMEs are concerned, I think the data is very clear. It will show that where SMEs is concerned, I think it's useful to bear in mind when you look at the data, it's not a homogeneous group. It's very diverse. And therefore, if you look at averages or you look at effective rates, one can get a misleading picture because, in fact, the vast majority of SMEs, vast majority of them pay very little tax. That's the reality. We also need to be careful when we look at reliefs and exemptions for SMEs that we don't want to have inadvertent consequence, that it discourages them from growing because if they stay small, they pay less tax. I think that would be unhelpful for our SMEs to scale up and grow and develop to become global champions in their own right. So we need to find the right incentives to support them, but at the same time, encourage them to scale up and grow. So that's something that MOF, together with our economic agencies, continue to study carefully. And we will look not only at tax measures, but also at non-tax measures. In other words, the kinds of support schemes we can provide to them through grants, loans, and equity. Next, Mr. Yip also highlighted the caution that we need to ensure that we spend in a fiscally sustainable manner. And he's absolutely right, because beyond our short-term fiscal response to COVID-19, we are mindful of our long-term fiscal responsibility to maintain a balanced and sustainable budget position. Our prolonged fight against COVID-19 has been facilitated greatly by our ability to tap on past reserves for extraordinary measures to protect lives and to safeguard livelihoods. But beyond these emergency conditions, where it comes to recurrent expenditure, ongoing expenditure, I think it's very important that we maintain the principle to fund them through recurrent revenues. And as our recurrent expenditures continue to go up for a whole range of reasons, including rising, rapidly aging population, the need for more healthcare needs to meet growing demands for social spending, then we have to ensure that we look at raising our revenues, raising recurrent revenues to meet these recurrent expenditures. So there is no avoiding this. Of course, it's never easy to implement a tax increase, let alone a GST increase. We have announced, the government has announced that the GST rate increase will take place sometime during 2022 to 2025. This remains unchanged, and we will continue to consider all factors, including our fiscal needs, as well as the prevailing economic conditions, in deciding on the timing of the GST rate increase. At the end of the day, we must have the courage to make the difficult decisions that are necessary to uphold a culture of fiscal stewardship and fiscal responsibility. That's how we can best serve the interest of Singaporeans, both in the current as well as in the future generations. Mr. Speaker, I believe I have addressed members' concerns and questions, and Madam Deputy Speaker, sorry, I beg to move.
The question is that the bill be now read a second time. As many as are of the opinion, say aye. To the contrary, say no. I think the ayes have it. The ayes have it.
The Income Tax Amendment Bill.
Committee stage, what day?
Now, Madam, I beg to move that Parliament will immediately resolve itself into a committee on the bill.
The question is that Parliament will immediately resolve itself into a committee on the bill. As many as are of that opinion, say aye. To the contrary, say no. I think the ayes have it. The ayes have it. question is that clauses 1 to 64 stand part of the bill. As many as are of that opinion say aye. Aye. To the contrary, say no. I think the ayes have it. The ayes have it. Bill to be reported. Minister for Finance.
Madam, I beg to report that the bill has been considered in committee and agreed to without amendment.
Third reading, what day?
Now, Madam, I beg to move that the bill be now read a third time.
The question is that the bill be now read a third time. As many as are of that opinion say aye. Aye. To the contrary, say no. I think the ayes have it. The ayes have it.
The Income Tax Amendment Bill. Item 3.
Order. I propose to take a break now, and I suspend the sitting and will take the chair at 4:15. Order, order.